Hello Adrian, and welcome once again to my channel. It's 7:30, so it's time for another episode of The Dang Oracle. Happy Eastern, everybody. So let's start off with how we always start, and let's just take a look at what is going on in the world. And we have, wow, an increase of around 30,000 people in the United States on the confirmed cases of COVID. Spain crossed that 166,000. That's quite a lot as well. So other countries seems to be, like Turkey is making a high amount as well right now. That's not good, guys. But anyways, let's go to the chart of the coronavirus chart and trading view. And as you can see here, these are total confirmed cases. These are the ones that recovered. But so as you can see, the amount of cases of people that are actually, when they're getting the virus and recovering, is actually quite substantial as well. So as you can see, 1.8 million, but 400,000 recovered. And sadly enough, of course, 109,000 people, over 109,000 people died. So that means like close to like a 10% death ratio, around a 30 to 40% recovery ratio. So yeah, but what I wanted to show you guys is that as of from the last couple of days, as you can see here, you can see that the slope is starting to flatten out. So yeah, it seems to be starting to flat out. So that's a very good sign. I think I think if we keep on doing this social distancing and all these measures of lockdown for another couple of weeks, hopefully we will start seeing a downward trend instead of a slope, an upward trend. So right now it seems to be starting flattening down in most countries. So that's I think a very good sign. Yeah, I think here in Germany, it's definitely a very flat slope already now. France is still going up. Italy still not looking very good. Spain still not looking very good. USA is starting to show a little bit of a slope momentum correction. So yep, that's it for the COVID update. So let's go back to our main business of today, which is of course Bitcoin. Investment, SPX, whatever. So what I wanted to show you guys today is obviously we are in a downtrend right now. We had a major crash or a major recession on the SPX or the S&P 500. So let's go to that chart first. As you can see here, maybe it doesn't really matter. As you can see, we had a major crash here. And basically I wanted to tell you guys that after a crash, we have 4 types of corrections. And the first type of correction is what we call a V-shaped correction. So a V-shaped correction is quite easy to say. We get a V-shaped recession. So the economy suffers a very sharp decline, but then immediately the economy is strong enough, and it immediately recovers very quickly, and it comes back immediately to the previous levels, basically, right? So this is a very good example. Around in December 2018, we had our last crash. As you can see, we crashed down. We hit our very important moving average here, and then that's a 200, by the way. See, as you can see, the EMA 200, and we immediately went back up, and business as usual. And I think it was like, let's see, we crashed for 1 month, I think, 1 month, and then immediately after 1 month later, we were back at the normal rate. So that's what is a V-shaped correction. So this is basically what we want to know, right? Is this what kind of correction are we going to get? So the first option would be a V-shaped correction. So it's, as you can see, if we go back here and we go back all the way up here, back to our normal state of affairs from a couple of months ago, this would be another V-shaped correction, right? A V-shaped correction. But obviously, The probability for having a V-shaped correction is on the lower end, and the reason why is of course very simple. We closed below this important trend line, which is the EMA 200. And if you look at the previous crashes, every time when we had a crash, we always bounced off the EMA 200. So what's the next type of correction? The next type of correction is what we called a U-shaped recession. So U-shaped recession is like what the U-shaped correction, sorry, is what the name also indicates, is that we form a letter U. So it goes down, it takes a long time on the bottom for a very, very long time, and then it jumps up. Right, so that's a U-shaped correction. So something like this, it goes down and it takes a really long time on the bottom, blah 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 blah, and then it goes up. Right, so that's basically what some people might think is going to happen as well. We basically go down here, we most likely will go back down here, we go back up a little bit, we go down here, but we stay around this bottom here at like the 2220 for a long time, and then we recover back up, so forming a U-shaped recession correction, sorry. And then the next correction that we can have is what we call a W correction. A W correction is where we make a W word, where are also known as double bottom correction. So what we have is we go down, we hit a bottom, we go back up, we hit another bottom, and then we go upwards. So where we form a letter W, right? So that could be a very probable scenario as well. So what happens then is that we correct here, we get rejected at some major rejection point here, then we go back down, and then we go back up, right? So a W correction. And then the last possible scenario is the dreaded, very dreaded, it's called the L-shaped recession. So an L-shaped correction is when the economy has a very severe recession and it does not return to the line growth for many, many, many years, or even ever. You know, it means a complete breakdown. And an example for that is in 2008, as you can see here, we have a complete meltdown from the SPX. It's an insane amount of percentage actually. Let's see here from our top to our bottom. For traditional market, it went down 53.7%, right? So even if we got our little bounce here, it kept going down. We got a little bounce here, it kept going down. And then only then, for after a really long time, if you can see here, from May 2008 to March 2009. So that's like close to a year that we were in a major correction, and only then we went back up. So this is forming the letter L, right? So luckily enough, we went back up, but this is like a nice example. Oh, thank you, Nuilan Anyo, thank you for following and welcome to the channel. That's the 4 types of corrections that we are having, I mean, that we can have. So those are the 4 corrections. I hope that, I'm using the S&P chart, but you can obviously also use this for the Bitcoin chart, because the Bitcoin chart is exactly, if you put it next to each other, you can see here, this type of V-shape correction is also available here on our Bitcoin chart. So there's a very, very high correlation between Bitcoin and our stock market, or in the S&P. And if you look at it at the gold chart, let's put it on the same time frame so we can see it. Gold chart is very different. As you can see, we had our correction, but we immediately jumped back upwards. So this is actually a V-shaped correction, because as you can see, we went back down, immediately back up to the previous highs. That's a V-shaped correction. And it's also the reason why people are calling gold, and I completely agree. Right now, gold is actually acting as a very nice hedge for the current economic crisis. Anyways, let's go back to SPX or Bitcoin. It doesn't even matter, whatever you want to check. It's correlated, so it's very, very same. So there's there's 4 possible scenarios, right? Thank you. Welcome also JC Sebastian, who is following me. Thank you for joining. So we have 4 types of corrections, First would be a V-shaped correction, and let's just go for our Bitcoin chart. So what would happen if we have a V-shaped correction? So it would mean that we just go down and then we go back to our previous high, so around our 10K level. So that's basically what would happen if we go for a V-shaped correction. Now, as you know, I've already given you guys my reasons why I don't think that is a very probable situation. Even though we have the halving coming up very, very soon, I still don't think this is going to happen, and that's the reason why is, of course, all these bearish crosses that I've shown. This is a bullish cross. All these bearish crosses here that I've explained to you guys in the previous videos. If you haven't seen, Chrissy Domingo, welcome to the channel. If you haven't seen the previous videos, go take a look at the first couple of videos. And also, I have to apologize for yesterday. Apparently something went wrong again with the technical issues, and I think half of my video, well, maybe not half, the last 10 minutes of my live stream was not uploaded. So I'm sorry about that, but yeah, I'm trying to correct it on a daily basis, and I hope after maybe a couple of weeks things will go very, very smoothly. But for now, have to bear with me on that. So anyways, back to my theory. So a possible scenario would be that we go back to 10K, V-shaped correction, everything is fine, no issues at all. But like I said, let's be honest here. This is not going to be taking a long time. This is probably going to take a longer time than we expect because of the COVID situation. Hi Berlin. Okay, maybe it's also a fan of Money Heist. Where's Denver? Welcome to the channel. Anyways, so the second possible scenario would be a U-shaped correction, and I also don't think the probabilities. Hi Furkan Korkmaz, I guess he's a football player or something like that. It sounds familiar. Ray chart Atienza, hi, welcome. So all of these possible corrections is oh, hi Al Castle. Welcome to the channel. So all of these possible corrections, 1 second, all of these possible corrections, this is I lost my stream thought. Yeah, the U-shaped correction. Yeah, that was like the U-shaped correction is most likely not a possibility anymore. If you look at this formation, this is not really going to be very pretty if you're thinking that this is going to be a U-shaped correction. Hi Javen Bulayo, welcome. So I don't think that's a very high probability as well. And then we have the W-shape correction, which definitely has a possibility. So this would happen. We could get here, we would get like a double bottom, and then we moon from here back up. So for me right now, the probability of a V-shaped correction is on a because listen, nobody can predict the future, although my stream is called the dang oracle, but it's more like a wordplay. So don't think that I am some higher being that knows what the market is going to do. Welcome Jeff, welcome to the channel. But I am looking at it as probabilities, of course. So what would I think has the highest probability of happening? And right now there's the two highest probabilities. Hi Jose, Alistair Nohai, welcome to the channel. The two highest probable corrections would be the W shape or the L shape, sadly enough. Although I am more leaning, hi King Dalvin, welcome to the channel. I'm leaning towards mostly the W-shaped correction, to be honest. So what I'm really thinking is that we get rejected here, we will go down and we'll go back up. Hi Jefferson Ganoy, welcome as well to the channel. And I think that has the highest probability right now, right? But obviously we can also not deny Omanoid. Okay, Omanoid, welcome to the channel. we cannot also not deny the L-shaped correction. So as you can see in the previous, and definitely with the how the economy is going on, Reveritz, hi, Reveritz, welcome to the channel, is the L-shaped correction, right? So we can just ignore this and it will just keep going down, and we're gonna hit a lower low, and then maybe like make another bounce and make another bounce down there, like really crash all the way down. So that's an L-shaped correction, which is definitely also a possibility, because as you know, a lot of people are saying that this economic crash is coming, is going to be brutal, is going to be very, very, very crazy, right? So that's definitely a possibility, but we have to be very, 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 very careful. And as a trader, not really that important, because what you want to be trading is the movement down or up. That's where you make the money, right? So for me, the W correction is most likely the highest probability, and that's where currently what I'm banking on. Hi Jeffson, welcome to the channel. That's what I'm banking on right now. That for me personally, that's has the highest probability for me. Hi Dexter, welcome to the channel. But obviously from all the four options, anything is possible, right? But I truly believe that right now the highest probability will be the W-shaped correction. And one of the reasons why I do think that the W correction is more probable is actually because of the mining situation. Hi Setfer, welcome to the channel, is because of the mining situation. So the mining situation, as if we look at the hash ribbons right now, as you can see, there's a very high divergence right now. At one point, there will be miners are going to be stopping, and they're not gonna do their job anymore, and are gonna stop mining, and then they will basically give up and surrender, and then but then also it will be cheaper for other miners to be mining, so there will be new miners coming in, difficulty is gonna go down, and so on and so on. This whole Bitcoin mining system is actually ingenious, and that's one of the reasons why Bitcoin is so popular, right? So it has a very good functionality. So for me, what I'm looking at is when are the miners are going to completely give up. As you can see, they have been capitulating since 19th of March. But every time after the capitulation phase, there's always a buy phase where people, just go back in and start mining again, because there's profits to be made, right? So if we look at this hash ribbon signals, it has been a pretty good signal, not in terms of time, but more in terms of prices. So every time when we get a major capitulation and we get this buy signal, if we compare this here, if we get this buy signal at this point, we can see that the buy price was around 3,500, and that's not bad, because our bottom last time in 2018 was around 3,100, right? So every time when we get this buy signal on the hash ribbons, it has been pretty good. Here we have a buy signal here at this point on the 26th of December. Let's look at what the price was on 26th of September, 26th of December, the price was $7,200, something like that, $7,200, and then we made a nice pump towards 10,500. So it's definitely not a bad sign. Sorry. And then as you can see here, we got major capitulation here. At this point, we dropped down a lot, but as you can see, we still have not a buy signal on the hash ribbons, and that for me gives me the highest probability that we will most likely, maybe we will not hit this low again, but maybe we will get near there. So what I'm looking for is finding daily bullish divergence on the daily before I can call this a reversal. And as I've been talking for the last couple of days, I've been saying this move back upwards is not a very strong move, because every time that we went up, the volume actually went down, right? So that's not a very good signal. Let's put it like that. So for me, this is actually a very bearish trend right now, and in the future, I think we will have a better, well, if you haven't bought at like, you know, if you didn't manage to buy at like 3.8k, most people wouldn't be able to buy there. I managed to get a position at 4.1k or something like that. So, but that was just like, it was so fast, right? So it was almost impossible. It was just a limit order that just got triggered. But yeah, who could have expected it? Me personally, I thought it would drop to like 5.5k or something like that. I never expected it to go to like 3.8k, to be honest. So that's pretty crazy. So what I'm waiting for is this to be so the miners to be capitulating and moving to the new system. And then what I'm looking for is the VWAP ratio. Let me show you this. So the VWAP ratio, let me zoom in a little bit. VWAP ratio has three colors, and actually you should only be looking at the purple line and the pink line. So whenever the purple line breaks down below the pink line, we have a bearish period. And as you can see here, we broke down here on around October 2018, and we had a very long period where we had a bearish market. And then here we broke up here around, let's say, January, right? And then we had that pump towards the 10.5k. So right now, as you can see, I'm gonna zoom in a little bit more. As you can see, the purple line after that major crash, the purple line is below the pink line, and we are still below that pink line. So in a macro perspective, once we get the purple line above the pink line, that means that the miner situation is improving, and that means that they're making money, and that, you know, the system is most likely going to have a price action, right? So that's what I'm looking for, and until one of those things show, where I see a buy signal on the hash ribbons, and when I see the purple line crossing above the pink line on the VWAP ratio, that's when I would be thinking like, okay, most likely, yeah, most likely we'll see something happening, right? So let's go back to our Bitcoin daily chart. Very important, this, as I've told you guys yesterday, I don't trade during the weekends. The reason why: the volume is very, very low. It means that there can be potentially a lot of manipulation, a lot of fake outs, and most of the times, to be honest, not many things happen, right? Hi SDN, welcome to the channel. And as you can see here, during the weekend, you can see the volume is extremely low. So, you know, a lot of fake outs, a lot of things can happen. That's why I really advise not to trade during the weekend. But weekly closes like tomorrow, daily closes, those are very, very, very important. And as you can see, yesterday we had a close above the EMA 21 of the yellow line here. That's a very big, very, very, very good sign. For me, we have broken out of this rising wedge, but sorry, for me it's more like a rising channel, but some call it the rising wedge. So if you think that this is the rising wedge, then you can draw it like this. If you think that it's a channel, you can draw it like this. The situation is the same, the result is the same. We will have a breakdown, right? So, but it doesn't mean that if we break out of this channel, that we immediately are going to break down. So what I'm still expecting, and which is something that I've taught yesterday as well, as long as we are keeping at above this EMA 21 on a daily basis close, we still have a chance to move back up, most likely until this level, somewhere around there. So this is, this is a very critical point, because as you can see in the previous couple of days, we touched that zone 1, 2, 3 before we broke down. So that was our support level that is now turning into resistance, right? So this is our resistance line. So as long as we keep closing candles above this yellow moving, yellow EMA 21, I still expect us to move back up a little bit. This can get rejected at any point in time. That is also one of the reasons why I'm not recommending anybody to be longing at this spot and time. So if we manage to get this push here, which is I think still very, very likely, and I will show you a little bit later on the shorter, smaller time frames why I think so. And then if we manage to break this box, we can go a little bit higher, and that would be our next target, which would be our previous high or our previous order block around this area here. which is around let's say 7.3 to 7.4k, something like that. Yeah, 7.3 or 7.4k. And if we magically somehow break this box over, we can still go to our previous 7.7k major, massive, amazing shorting position there for me. That's what I'm thinking. But the chances that we are going to get there is very, very low, because we, first of all, I think we have broken out of this channel, and we are still trending below this amazing orange line here, or the EMA 55. As long as we keep going down, closing candles below that line, there's pressure from the top that is pushing the price down. So what are the highest probabilities? Well, the highest probabilities is most likely that we're most likely going to go back here and then get rejected, right? So as I've told you guys, we would likely make some type of a bearish flag and break from this point here. It doesn't mean, like I said, actually stocks are still looking pretty good. So everything will depend on what happens on Monday or our weekly close. So tomorrow is actually a very, very, very important day. And another thing that I wanted to show you guys is the horizontal, there's the historical volatility percentage. And as you can see, it has been, let's go on the daily basis. On the 4-hour basis. Yeah, here 12 hours, sorry. On the 12-hour, we can see here that it has been contracting pretty hard, and whenever the historical volatility percentile contracts, it will suddenly pop out and expand, and that's when you have these major moves of, like, you know, $1,000, you know, $500, $600 moves, and that's what I'm waiting for. And if you can see here, we can see that next week, like, you know, maybe tomorrow. Yeah, maybe not tomorrow, maybe Tuesday, Wednesday, something like that. We can see that this is getting a very, very mature pattern, and it can break out. So I'm definitely expecting a very big move on somewhere next week, right? So next week is going to be a very, very important week, because, like I said, I do think that we will have a very major move, and we will see. Most likely what I expect is going to happen is a very big breakdown. Hi, Al Miguel. Welcome to the channel. Okay. So let's go break it down a little bit on the 4-hour. So something that is very important on the 4-hour chart that I wanted to show you guys is, look at this. We had a bullish cross, and then immediately we had a bearish cross immediately after, like a fake out basically. And that's what happens when the volume is actually very low. So what happens is the algos, the bots that are manipulating the patterns, is they show that we're gonna have a bullish cross, and hoping that people are going to enter a lot of long position, because as you can see, price dumped down here, and we see a bullish cross. People will be thinking like, oh wow, this is a very good opportunity, or the bots are going to be thinking this is a very good opportunity to buy. And what happens is the bots, the more intelligent bots, are going to actually push the price even lower. It doesn't mean that if over here on this spot there were too many shorts, then obviously what the algo is going to do is first push like a scam wick up to close those shorts, and then push the price back down. So that's basically what I'm thinking right now is going to happen, because one of the reasons is, if you look at Binance, let's go to Binance. Let's refresh that. If you look at the open interest, which is the positions of the traders, I always look at the top traders, what their positions are. And right now, as you can see, if you look from yesterday until today, their short accounts has been increasing. So more and more people are putting in short positions, which is something that can be, of course, very, very dangerous, right? And then real-time positions, as you can see here, they are still overall, and the top traders are still overall 54 over 45%, meaning their whole account is actually leaning towards shorting, which is normal, right? I mean, every normal trader I think, but their short-term position is still in a long. That means for the top traders. I'm not talking about the total. If you look at the total long short ratio, as you can see here, the total long short, so that means the other retail people, they are actually already in a short. So for me, it's very simple, right? Since the top traders are still in a long position, I still think there's a short squeeze coming up here, and that makes all the total sense in the world. Like I said, because of the pattern that we are seeing right here, right? So we have this bullish cross where the price got dumped down. People will be thinking like, oh shit, this is an amazing opportunity to be longing, and then prices getting dumped down. But the price got dumped down. People are thinking like, okay, well, let's close our longs. The price pumps back up into the retest of the cross. People are saying, oh shit, I should have kept my long and then entered the long, and then they push the price back again, down again. And this is for the third time most likely what is going to happen, but on a higher scale, because on Monday there will be more money trading, and definitely when the stock market is going to be open. So there's two key areas, two key timings that I'm going to look forward for tomorrow. Definitely wake up very early tomorrow at 8 a.m. because then we will have our weekly close, and then 9:30 p.m. when the stock market or the New York Stock Exchange is going to open. Those are the two key times for tomorrow. And if you are also interested in the CME starts trading already at 6 a.m. So yeah, I think pre-market, if you want to see the pre-market, that's going to be very interesting as well. Because going back to the CME charts, something is very, very interesting. So as you can see here, we have a bullish cross that we're seeing on the spot price. But if you look at the CME chart, which is the chart that most traders should be really, really, really paying attention to, as you can see here, on the CME chart on the 4-hour, we never had a bullish cross. If you look at this, you can see here the yellow line is the EMA. The EMA hasn't crossed in a bullish way. It's actually most likely going to get rejected. So that gives me that, you know, when I saw it happening on the spot price, that we had that bullish cross, I was like already like, okay, this is a scam, you know, this is not most likely not going to happen. And that's the reality, because on the CME chart we never had a bullish cross. So for me, that says enough. But if you look at the CME chart, you can also see that we have the historical volatility percentile at flatline at the 0. It means that it's going to be very volatile. The price, we're going to have a very big move when the market is going to open. That's basically what the historical volatility profile is going to say. So most likely we're going to have a gap down because the price difference is so big, because we closed on CME at 7,290 in comparison with spot price right now, where we're at 6,872. So most likely we'll have a gap down. So this is what I'm expecting on the CME chart, is that we'll have immediately an opening around the 7,000 line, and then we'll have a gap down that's most likely going to be pushed off, and we're going to even out the gap between the CME chart and the spot price. That's what usually happens anyways. So that's one of the reasons more that I'm really thinking that we're going to have one more last push towards this green box right here. But we can easily get rejected here as well with all these EMAs that is acting as a resistance. But I still think that we're going to go up a little bit higher. Once again, if you look at the traders, the Chinese traders, they are still in a long position, and I think you should be very, very, very mindful of that, because most of the time these Chinese top traders are really, really, really good. So I'm not betting against them. I usually look if there's like a discrepancy between top traders and just normal traders, or the normal what is going on in the market. So let's make some trend lines and then try to find some pattern here. If you can see here, we can see like we have some sort of like let's say some sort of like a symmetrical triangle here. So if we make a measured move of this symmetrical triangle from here to here, and let's say we break out tomorrow. As you can see, if we break out somewhere around tomorrow, we would hit our green box of what I'm expecting. But if we hit that price there, if you can see here, we are going to form a bearish pattern, right? So if we hit that box there, price would be around here, let's say here, and then we would make here something like this. This would be a bear flag, as you can see on the pattern. And then if we, well, let's take this one, let's make a measure move from here, and then if we get rejected there and we break down somewhere here, maybe here, somewhere here, we would hit our target of 6.4k, which is what I'm expecting somewhere next week. So basically that's what I'm looking for. Tomorrow I'll keep my eye and wake up very early and keep my eye what is going to happen. For now, I still think that we have a little bit push up forward here. I don't know if we're gonna get rejected here, yes or no. So that's what I'm looking at as a trader. If we get rejected here, definitely, and rejected here, and it's hanging on here, and it breaks down, definitely I'll definitely enter a position there. If we manage to get closing some boxes here, then I'll be looking to have some shorts at this point of time around the previous high, around the 7.350 to 7.4. If we manage to break that resistance, then I'll be looking at my ultimate position here from 7.7 to like 8k. That would be my ultimate shorting position. But for now, probabilities are very, very low that we get there. Most likely, what I think is we'll hit this box here tomorrow, and then we'll get rejected. And I think we're going to see some prices by the end of next week or something like that around the 6.4k level. That's basically what my main concept is. And yeah, that looks very, 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 very probable. Let's look at the RSI. As you look at the RSI, I've made this trend line here. As you can see, we broke out of this line. As like I said on Friday, I think Friday, yeah, it was like around 7.2k, and I immediately shorted once we broke that support line, and I closed, like I told you on the guys on the channel as well, at around like 6,750, because that was the major support area right there, and I'm out of position since the whole weekend. And as you can see, price is just hovering around, and I still think that we have the chance to be curling up here a little bit more, and like I said, retest the previous support line, and then we will see what the price action will be. Okay, so let's look at a little bit at the expected move charts. The expected move charts is going to tell me that in the next 12 hours, the first standard deviation would be 7,042. So that would be exactly what I've told you guys. If in the next 12 hours, most likely around that's the green box area. So that matches very, very much with the first standard deviation, and the first standard deviation down would be at the 6.7k line. So that also matches with what I'm saying, that most likely we're not going to break immediately. We're going to still have some bounce or support. We might wick down once again to that area that I've spoken here, this green line once again, but we have to be very careful because we've already two, 3 times already that we've tested that zone. But even so, if we break down here, there's still a chance that we go back up. So I'm still looking more. As you can see, the slope is a little bit on the towards the high end, so there's a little bit more probability that we're gonna move up rather than down. So it's not much, as you can see. It's pretty much 50-50. Well, not 50-50, I would say it's like 55-45. So that's basically what I'm thinking. So for me, still overall, on the macro level, of course, I'm still bearish. On a short-term level, most likely we're going to have a little bit of a push. Let's look at the 4-hour RSI. As you can see here, RSI has crossed over the EMA, which is a positive sign, and most likely we have some energy and strength to be going up a little bit more, most likely somewhere around here to this blue box here, and then we'll see what pricing is on that spot. So right now, I think we're gonna yeah, we're getting nearer to our heavy resistance at the 7K. If we break that 7K, most likely we'll hit the 7.1 here. Yeah, around this Murray line here, this one on the 4-hour chart, and then most likely we'll have to see what happens on the stock market to be reevaluating. So yeah, I think that was it. Yeah, okay. So yeah, still the same expectations. Let's see by tomorrow if whatever I'm saying is bullshit or or incorrect. I hope this time my whole video is going to be okay. So what I'm still expecting is somewhere around here, this green box here, if we don't get rejected here, but it looks like we have a lot of we still have a lot of space to be going upwards. So I think we're gonna break this by tomorrow. Yeah, somewhere around the 7.1k, most likely 7k to 7,050, something like that. It's most likely where I see things happening tomorrow, and then we will have to reevaluate tomorrow what happens. Do we close some candles above this box? If we close some candles above 7.1k, I expect us to move a little bit higher towards like 7.350 ish, something like that, and then once again we will have to reevaluate. But overall, I'm still bearish, and I think it will take some time. And I hope you've learned something from the types of corrections. And my main theory is still the same. We're most likely going to have a double bottom correction or a W shape correction. And so yeah, let's see what happens tomorrow. So see you guys tomorrow, 7:30. Once again, stay home, stay safe, and stay COVID free.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.